Okay, well, amidst all this breaking news about Joe Biden and the classified documents that he's misplaced, quote unquote, we did have an inflation report this morning, the CPI. It did move the market a little bit. I must confess I haven't followed it closely, but I think the market was up a fair piece today, 100 points or some such thing. Anyway, we've got John Carney, Breitbart Economics and Finance editor, co-author of the Breitbart Business Digest, which is a must-read. John, welcome. So, the overall number fell a tenth, which was expected. The core was up 0.3. Last 12 months, CPI is up 6.5%. The core CPI is up 5.7. Just a couple things before I got caught up in this Biden stuff earlier. Services inflation is still a problem. It was up 0.6%. That's a big number.
That's a really hot number, 0.6%. And it is not calming down. We're seeing, everybody knew the goods inflation was going to come down. That wasn't going to last, in part just because you can make more goods. The market can solve the problem of too few goods. So you make more goods. We got through a lot of the supply chain problems. But now that inflation is over in the services sector, you can't just build more people. This is going to be a lasting problem. And we know already we can see it showing up in wages. The December wage number, I mean, it's great that finally workers are earning more than inflation. So they're seeing real wage gains. But that spending power is going to feed more inflation, so it's not going away very easily.
Yeah, the wage tracker, what is it? The Atlanta Fed wage tracker, John, 6.1%. Your Cleveland Fed median CPI is still
0.4.
6.9% year
and
on year.
0.4 for the month, which is really
another
high.
big number.
Yeah, another big number.
You know, a friend of mine was writing in, there's too many 4 and 5 and 6 handles left in this story to just say the battle is won. Now, inflation's come down. There's no question about that. The curve is deeply inverted. The money supply has stopped growing. I get all that. That spells lower inflation. It may spell recession, too. But you still haven't conquered all, and the Fed is looking at wages.
Right, right. The Fed really is going to look at the wage numbers and the unemployment numbers. So, and I think actually the market didn't react as strongly today because they'd already built this in. They believe the Fed is going to go easier because we're seeing some of the the wage numbers be a little softer than people thought they would. But the Fed really is going to focus. They're afraid of wages going up too much. They're really going to focus on this ratio of job vacancies to unemployed people. That is not coming down. That's up right now at 1.7 vacancies for every unemployed person. Nobody thought that was even possible before we got up to close to 2 to 1 during the
last
year. But this number is what the Fed is really going to focus on, and the market is kind of reading it wrong. They see these soft numbers and they think, oh, the Fed's going to calm down. The Fed's not going to really keep hiking.
But they're going to go to 5% plus,
right?
And it's going to stay high. All right.
Yes.
There may be a disconnect between what these futures markets are saying and what the authorities are likely to do. But, I mean, again, and Jay Powell, I know he had to go to Stockholm, Sweden to say it, but Jay Powell basically said, I'm not going to be intimidated.
Right.
We're going to stick to our knitting, and we're not going to run climate change policy. We're going to get the inflation rate down to 2%.
I actually think it was daring for him to do it in Europe because as popular among the American left as the idea that the Fed should, somehow mitigate climate change, which they have no business doing. And Jay Powell, actually, it's even more popular in Europe. They love this idea over in Europe of having the central bank control the economy and force, not force banks not to fund any fossil fuels, force them to fund green energy projects. Powell, I think, very boldly. This is, I think,
his finest moment.
It is the finest moment, exactly.
Finest moment.
He said, "We're not going to. Not only are we not doing that, we won't do it. We will not be climate policy."
I texted my dear friend Steve Mnuchin last night because he was a big Powell backer, and I said, "Jay Powell, Regulator of the Year. It's his finest moment."
It really is.
I don't care where he said it. He said it.
Look
there. Right. No climate change. You're not going to push me around, Elizabeth Warren, and we're going to get the inflation rate down to 2%, even if he does destroy the economy.
I can't wait till the next hearing when Powell goes up on Capitol Hill, because he's given the left, they're going to come at him over unemployment, because he's obviously seeking to raise unemployment, and this one, they're really going to come after him. So I've been a critic of Powell. But I have to say, as you said, finest moment. Good for you guys getting him in office.
He's the MVP of bank regulators. John Carney of Breitbart, must-read stuff.